All right, I got my coffee and ready to roll. First up today, Bitcoin's crash and the comeback that followed. Because what we just watched wasn't noise. It was a full market stress test. This move pulled in everyone. Retail traders were the first to feel the pain, especially leveraged longs on Binance and Bybit, where liquidation engines ran nonstop. Institutional desks weren't immune either. Flows tied to BlackRock-linked spot ETFs showed stress early in the week, then stabilization as the rebound began. And behind the scenes, whales were active. Addresses associated with long-term accumulation, including continued ads linked to MicroStrategy style positioning. Analysts across the spectrum weighed in. CoinDesk, CryptoQuant, and Fundstrat, with Tom Lee calling this a capitulation bottom. Bitcoin plunged to roughly $60,017, its lowest level since October 2024. That completed a 30% drawdown from the highs. Then, almost violently, Bitcoin reversed. One single session delivered an 11% gain, the largest daily move since March of 2023, pushing price back through $70,000 and adding over $200 billion back to total crypto market cap. That's not a bounce you ignore, but it's also not a signal you blindly chase. The lows printed early in the week, February 5th into the 6th. The rebound ignited Friday, February 7th, and carried into the weekend as short positions scrambled to cover. Importantly, this didn't come out of nowhere. It followed days of relentless selling tied to macro fear, tariff headlines, and tech sector weakness. This was pressure building until it broke. The action was global. Binance and Coinbase led volume with more than $50 billion traded in 24 hours at peak intensity. Asia sessions amplified the downside, high leverage, thin liquidity. U.S. trading hours powered the rebound, ETF flows stabilizing, risk appetite returning. This wasn't regional, it was systemic, because the market finally capitulated. Over $2 billion in liquidations flushed out excess leverage. RSI plunged near 25, deep into oversold territory. Whale accumulation ticked up, funding flipped, and fear reached levels that historically don't last. At the same time, macro pressure eased slightly, tech stocks found footing, and tariff rhetoric softened just enough to shift positioning. Fear didn't disappear, it simply stopped escalating. That's often how bottoms form. Now comes the hard part. If Bitcoin can hold above $70,000, we open the door to $80,000 to $85,000, driven by short squeezes and potential ETF inflows resuming. But make no mistake, this recovery is conditional. A hawkish Fed pivot, renewed tariff escalation, or regulatory shocks could still force a retest of the $60,000 zone. Longer term, real confirmation only comes if regulatory clarity, especially around the clarity framework, turns from rumor into reality. If that happens, this isn't just a bounce. It becomes a launch pad. And that brings us to the broader picture, because Bitcoin didn't fall alone.